morning, traders from across the globe. Thank you so much for tuning in, and welcome to the 2175th edition of Short-Term Trading Live with Oscar Carboni. Again, welcome, kids, and thank you for tuning in. Please subscribe to my videos, and let's get moving. This video coming at you on a Monday night for trading Tuesday, October 13th, 2020. It's Tuesday the 13th. Does that mean anything to you? It doesn't mean anything to me. But it is Tuesday the 13th. So, traders, in video 2175, I am going to tell you that continuation patterns, can I spot them or what? I got in front of you guys, or last video I did, I should say. I told you I've got a Nasdaq continuation pattern. No matter what you've read in books, this means we'll go higher, not lower. I started with a diamond, and then I showed you it also had the inverted head and shoulders continuation. The market exploded since then, and Omni remains bullish for trading on Tuesday. Nasdaq, Emini, S&P, Russell. So wow, I'm calling that continuation pattern. We've got a chart to look at. And then there's UPS. Traders, you've got UPS, and this year, more than any other year ever listed, ever records kept for, the unprecedented amount of people who will shop online this year and have their packages delivered. UPS is it has to do well, right? It's probably going to benefit dramatically. Fundamentally, there's a picture. Technically, my picture looks just as rosy as what I just said fundamentally, my technical picture. And I say the UPS chart plus the holiday season plus Omni equals higher prices. So I've got short-term, maybe this week, and long-term, end of this year, targets for UPS. And you know the logic there makes perfect sense, right? Just imagine the amount of people who will not go to the malls or not go to the stores this COVID, Christmas, holiday season, whatever it is for you, Hanukkah, Kwanzaa, whatever it may be. Many people will not be gathering at stores. I think this guy, FedEx, anything like that should really do well. Of course, the obvious will be, if you can afford to even trade, would be things like Amazon, Shopify. But UPS, I want you to keep something in mind about this. It's a slow mover. I expect to have to hold it a few days this week to reach a target, and we don't expect it to go gangbusters in any direction, but up eventually till the year comes to an end. So I just wanted to tell you that. Remember that this is a very risky game. Futures trading, stock trading, options trading, ETFs, anything that you trade has huge risk. The volatility lately is ginormous, if you will. Please expand your stops so you don't get stopped out if you are correct in your call and you get on the right side of the market. But if your stop is too shallow for the recent volatility, you get knocked out anyway, and then watch what should have been a winning trade not win for you. You know that happens, right? So you've got to expand your stops on Tuesday because of what you just seen Monday. But know that there's a lot of risk, and this is not suitable for everybody. So, once again, I'm going to show you continuation patterns. The market continued, baby. I love it. And we'll look at the UPS chart as well. With no further ado, let's go look at some charts. Traders, if you recall my last video, the one right before this one, last week, I told you two things. One, Nasdaq had a continuation pattern. We started off with a diamond. Once we broke out of the diamond, I then said to you, the diamond is a continuation pattern to begin with. I then said to you, now that this is complete, I can discuss this one as well. There's also an inverted head and shoulders. Left shoulder, head, right shoulder, upside down. A normal head and shoulders looks like that, so to speak, right? Bars in here, bars in here, bars in there. But the inverted is bullish, and I showed you that not only is there a diamond, but now there's an inverted, and it's finally complete, so Nasdaq will rally, and this is what happened since then. Wow, is that not sick? Look at those two charts. It's out of control. Now that, my friends, is how to spot a continuation pattern. Here's where my problem lies. I spotted the pattern. I was out on Thursday, as I told you I would be. I was out on Friday, and I missed getting long on Monday. We tried to get long right here. We didn't get a fill. I haven't caught a single bit of it. So big deal. I called the continuation pattern. We didn't make a dime on it. Maybe you guys did watching the videos, but me personally, I was out for 2 days and no fill on Monday. Hey, we have Monday night to Tuesday. Then there's UPS. Traders, look at UPS. How sick is that? It was in this wonderful pattern for a while, a channel, if you will. Created a new channel, is now running up, and I've got a target of 182.5, 183.5. If, of course, the market continues up this week, UPS should go with it. And I think we can get up there this week. And then, year-end target, if things stay solid this year and nothing comes out of left field from Mars or anything, I think we can get as high as 194 by the year's end in UPS. All right, traders, I thought I'd show that to you. Let's get together now and finish this video. So, traders, you've seen the charts, and that's my technical argument, and I am going to stick to my story, kids. Now, we have gotten past the resistance in Emini S&P of 3480. We are now starting to sail towards the target, number one for the year end, of 3674. And look how interesting this is. We've got 22 days till the election. That's in November. This is a year-end target I gave out in the beginning of the year. The year's almost coming to an end, and target number one is now starting to at least be seen in our radar. That means we could easily get to target number two of 4035 by year's end. But keep one number in mind with the Emini S&P. 3576. That was our previous high. If we get up there, you know what happens with double tops, right? So let's get up there first, and then we'll see if it acts like a double top or not. All right, traders, so that's what I wanted to show you for Monday night trading into Tuesday. We have a long week to go, so keep your powder dry. If you do get in, don't chase. Make your stops wide and sit back and let the markets revolve around your trade, especially if you're following the Omni trade recommendations. Put your orders in and leave the keyboard alone. That is the best way to follow those Omni recommendations as they come out. And for you Omniacs, I'm not sure. I may still have an open seat, one left for Omni Camp. That is November 5th through the 10th. It's coming up, kids. We got 3.5 weeks to go. I may or may not have an open seat. I've got a great Omniac friend of mine who's been around for 10 full years watching the Omni, and he's trying to get the time off from work to come to fill the third seat. If that doesn't get filled, I will have one open seat for this November's Omni Camp. Time is ticking. Plans have to be made. If you want to learn the Omni Oscars Market Navigational Indicator, how I come up with all this great stuff and present it to you and my Omniacs, if you want to learn that for yourselves, you want to finally be able to get this right when you make calls, well then call me, 702-629-4755, or come to livewithoscar.com, click the OmniCamp banner, and fill out an OmniCamp application. Send it in anyway in case this gentleman can't fill the seat because he can't get the time. Maybe I'll choose you. Time's ticking. Do it now. Make sure you call me and keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay, and believe me, I know that's not easy, but put your stop in first. Keep your hands off the keyboard once your orders are placed, and say this to yourselves every morning, every afternoon, every evening, and by now you should know what that is. Stops are in. Emotions are out. Hey, silent majority out there, you know who I'm talking to. You can start voting, right? Get out there and vote, people. Vote in person. Make sure you vote. The actual date's in 22 days, but you can start voting now. Get out and have your voice heard. Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.